You ever wonder how the pros really get an edge in the market? Well, I can tell you it's not about luck or just guessing. Today, we're going to pull back the curtain and deconstruct a professional's actual game plan. We'll see exactly how they get ready for a brand new week of trading, step by step.
So, what's the big secret? It's actually pretty simple. They have a plan, a really detailed, structured game plan. And you know where it always starts? Not by looking forward, but by looking back. They got to understand exactly what just went down in the market last week. All right, so let's get right into it. We're going to break down this week's Mental Markets newsletter from analyst Chaz Markley. This is our chance to see how this whole process works in the real world with real trades. Okay, first things first. A trader's got to read the room, take the market's temperature. And last week, well, things were kind of complicated. The signals were all over the place, and pretty much everyone was watching one stock in particular. And this right here really sums up the whole NVIDIA story, doesn't it? On the one side, you've got this insane AI boom just printing money for them, record revenues. But then you flip it over, and you see this huge risk. I mean, 30 to 40% of their revenue comes from just 3 or 4 big customers. You got to ask, is that sustainable? And that's the question every trader is trying to answer right now. And you can see just how choppy things were right here. Look at this. The big indexes basically flat. S&P, NASDAQ, Dow, nothing to write home about. But check this out. The newsletter's call to watch the small cap stocks, the Russell 2000, that was absolutely spot on. They totally led the pack. Okay, so you've got this big picture view of the market, but how do you turn that into an actual trade that makes money? Well, let's break down a winning example from last week to see exactly how it's done. So the newsletter lays out this TSLA trade in 4 simple steps. First, they identified a super important price level, right around $343. Then came the trigger. The stock punched right through that level. So what's the action? They jumped in, going long by buying the 350 call option, and that's basically just a low-cost way to bet that the stock is going to keep climbing. And the result of that super disciplined 4-step process? Boom! The trade hit its target perfectly, and get this, delivered a profit of over 100%. That right there is why having a clear plan is such a game changer. All right, so we've looked back at what happened. Now it's time to look forward. We're going to build the attack plan for the week ahead. And we're starting with the big one, the most watched index on the planet, the SPY. But before we dive into the plan, there's a key term you gotta know, the pivot zone. Now just think of this as the line in the sand for the week. It's the battlefield. If the market stays above this zone, the bulls are in charge. But if it breaks below, well, the bears take over. It's that simple. And here's that plan in action. You can see the pivot zone, our battlefield, is set right between 643 and 645. The strategy couldn't be clearer. If the market stays above that zone, we're looking at these upside targets. If it breaks below it, then we're watching these downside support levels. It's a pure if this, then that game plan. No guessing. Now, you're not just watching the main index, right? A smart trader is always on the hunt, scouting for individual stocks that look like they're ready to make a move. So let's check out what's on the watch list for this week. First up, we've got BROS, which is the coffee chain Dutch Bros. So why is this one interesting? Well, it just had this really powerful bounce off of a super critical long-term support level. And here's the thinking behind it. It broke out above what's called a massive volume shelf. Now, what's that? It's basically an area where a ton of buying and selling happened in the past, and it acts like a really strong floor. So the idea here is that the stock passed this huge test, and now it might be free to run higher. Next up on the list, CCL, Carnival Cruise Line. And this one is a little different. It's not just an idea. It's a trade that's already happening. And the reason for it is, well, it's huge. We're not talking about some little pattern on a chart here. This thing is breaking out of a massive 5-year base that's been building since COVID. I mean, 5 years. When a stock breaks a pattern that big, it can signal the start of a whole new major trend that could last for months or even years. Okay, so let's shift gears from stocks over to commodities. We're looking at SLV, the silver ETF, and this one is showing some truly historic strength. Get this, a 15-year breakout. Just let that sink in for a second. A price level that hasn't been touched in a decade and a half. A move like that is a big deal. It often points to a massive fundamental shift in the market, and that's exactly why it's on the radar as a potential long-term play. And finally, The last idea on the watch list is a bit of a comeback story. We're looking at The Trade Desk, or TTD. This stock took a really big hit recently, and the thinking is it might be ready for a bounce.
This is what you'd call a classic bottom fishing setup. The stock just got hammered after its last earnings report. And the bet here is that all the sellers are finally exhausted. The belief is that it's found a short-term bottom, and that creates a really interesting chance for a reversal.
All right, there's one last piece to this puzzle, and it's absolutely crucial. You have to know what's coming. You have to be aware of the big scheduled events that could come along and just blow up even the best laid plans. And looking at the calendar for this week, it is all about one thing: inflation. You've got PPI on Wednesday and then the big one, CPI, on Thursday. You can bet the market is going to be hanging on every single number, desperate for clues about where the economy is headed. And as if that's not enough, you've got some major earnings reports that could just dump a whole lot more volatility into the mix.
So that leaves us with the million-dollar question for the week, doesn't it? We have a solid, well-thought-out plan here. It's based on clear price levels and chart patterns, but is that big economic news going to back it up? Or is it going to throw a giant wrench into everything? We're going to have to wait and see.